Kalyanaraman, the ED at Kalyan Jewellers, joins us on the show right now. Ramesh, hi, morning. Good to have you today on ET Now. Tell us how the demand trends have been in the first quarter and what's it looking like for July and August. Do you see this 30% plus growth sustaining for the rest of the year?
Yeah, so Q1 was very good. Revenue grew by around 34% in India, and on a consolidated, it grew around 31%. Strong momentum, very good footfalls across all the sectors, all the stores. And yes, and July started off very well, very similar to Q1 for the first 2.5 weeks. And then because of this Adhik Mas from July 18, there has been a pause in the wedding demand, especially in the non-South markets. But again, it's not a lost sale. It should come post the Adhik Mas. And again, a few of customers may go to Q3. We might have absorbed something in Q1 as well. But as we speak, weekends are strong and momentum is extremely strong.
So you see this 30% growth level sustaining for the rest of the year, right?
Yeah, so I'll not be able to guide you on a number, but yes, momentum is very strong.
Great. The share of studded jewellery has increased from 29 versus 24% that you clocked last year. Are you seeing higher demand for studded jewellery during the quarters? And, what's the trend that you're picking up here?
Yes, studded. Yes, there is an organic growth for studded jewellery. But the jump which you see from 24 to 29 is majorly because, again, our expansion has been in the non-South of India, where there is the studded demand is much more than in South. So the expansion has been focused in areas where the studded demand is higher than plain gold.
Okay, Ramesh, but let's talk margins because they've been under pressure despite this increase that you've seen in your studded share. So what is the reason for your margin contraction, and do you think it will continue to remain under pressure?
Margin, actually, there is no pressure at all. On the retail front, the margins have only improved year on year. And the margin, the degrowth which you see is majorly because of the franchisee operations. Franchisee comes with a lesser gross margin because there is a share on gross margin with the franchisee partner. But otherwise, on a retail level, on a store level, the margins have no pressure at all.
Fair enough. So 7.4 to 7.5%, you think that's a sustainable margin level you'll maintain?
No, the more franchisee stores come in, the EBITDA margins will keep on degrowing. But on the PBT level, the PAT level, the percentage-wise, it will keep on going up because our franchisee is a FOCO model where the franchisee partner invests on the inventory, and the ROCE of every new showroom, franchisee showroom, is more than 75%. So ROCE also improves, PBT also improves, but there will be a decline in EBITDA margins as well as gross margins.
Okay. What about your same-store sales growth? In India, it stands at about 15%. Does that look sustainable?
So usually we go with a 5 to 7% same-store sales growth, but Q1 has been extremely positive. It is in the range of 15%, but I would always advise people not to target for 15, keep 5 to 7%. That itself is a strong SSG.
All right. What about the tier 2 and 3 cities, rural India, small towns? How has been the performance over there?
The demand has been strong across geographies, I told you, and very strong, very good momentum across India.
Okay. Tell me what the store expansion plan is, both for India as well as Middle East.
So India, as we speak, we announced 52 new showrooms in this financial year. And already we have opened 15 out of it. And in August itself, we are opening 10 more. And it will all be in the non-South markets. And we are trying to open most of the showrooms before Diwali so that we get 2 good quarters. And that's about India. Over and above that, Candere, our online platform, is also going on an expansion spree. We are trying to add physical stores in Candere. We want to end up at least having 30 physical stores by the end of the year. Now, as we speak, we only have 2. Middle East, again, we are trying out our first franchisee store. That will be in Q2, before the end of Q2. And once it settles down, we will guide you on expansion plan for the Middle East.
Sure. Ramesh, good to have you on the show today. Thank you for giving us, some color on the quarter gone by and how the rest of the year is going to pan out.
Thank you very much.
Okay.